Assalamualaikum and good day to everyone. My name is Siti Madia Minti. My trade number 277295 will present you about introduction of investment analysis for 5 stocks in marketplace. Investment is defined as a commitment of current financial resource to get a future gain and also a great return. There are differences between investment and saving, which is investment is an earning that invested to get the return in future. Meanwhile, for saving, defined as earning that not spent for any gain or high return in future. There are two analyses involved in this discussion, which is fundamental analysis and technical analysis. Fundamental analysis is the study of underlying factors that have an impact on health of economy, industrial sector, and business. The objective of this analysis is to predict a future price movement and make money of it. Meanwhile, for technical analysis is an analysis of direction, prediction of the price security, which is at the price that buyer and seller settle with a deal considered as a one-piece figure, which is synthesis, weight, and express all the factors in the market. The assumption of analysis, including the combination of variables affecting supply and demand in market, determine a security market value, and also the movement of security price. In this paper, we will discuss about fundamental analysis and technical analysis of 5 public listed companies that actively traded in Bursa Marketplace in Bursa Malaysia, which is Air Company Malaysia Berhad, Allianz Malaysia Berhad, Hong Leong Finance Berhad, Sandabi Plantation Berhad, and also End-to-End Connect Berhad. All the 5 public listed companies comes from the different sector in the business environment. We are also using the top-down approach in security analysis, which is involved a taking broad view of a sector and businesses which is investors are interested for investing. The following phrase entail looking at the detailed company information and financial information, including statement of analysis, statement of income, cash flow, and also the statement of the security value in market. The following phrase also undertake identifying the company and sector in order to make a final investment decision to buy the stock. Good day, Doctor. My name is Yap Shahin. My number is 27S704. I will explain about the economy analysis. First and foremost is the monetary policy. Monetary policy is a set of tools or set regulations that has been set by central bank to promote sustainable economic growth by controlling overall money supply or interest rate that affect all segments of an economy. There are two main variables in influencing economy activity through monetary policy, which are money credit supply and the rate of interest. The goals of monetary policies are maintaining stability of market price, decrease the unemployment rate to ensure a high employment rates and faster rate growth of economy. Furthermore, in monetary operations, there are a variety of instruments that have been introduced by the Monetary Policy Committee, such as uncollateralized direct borrowing through open tender, repo transaction, auction of bank negara monetary notes (BNMNS), which is a short-term securities issued by the bank with a discount value. The fourth instrument is the auction of bank negara interbank bills. They are only applicable for licensed banks. The fifth instrument is outright sales and purchase of government securities by the bank in order to adjust the liquidity in the banking system. The last instrument is foreign currency swap in order to add and absorb the liquidity with swapping one another. The second factor for economic analysis is fiscal policy. Fiscal policy is a policy that focuses on government spending and tax policies. These fiscal policy have two, which are expansionary policy and contractionary policy. Expansionary policy is a policies intended to boost the economic growth by injecting money into the economy through consumer spending with two different methods, which are direct government deficit spending or increase the amount of lending to the business or the consumers, and also increase the tax rates. Contractionary policy is a policy that reduce the amount of money available to be lent to the borrowers, such as consumer or the business, and increase the tax to reduce the business spending. In Malaysia, the government has revised the GDP for 2021, which has a deficit target from 5.4% to 6%. The third factor for economic analysis is consumer spending. Consumer spending index that indicates the measure of the aggregate price levels in an economy of the country that consists of goods and services that has been purchased commonly in a bundle. The consumer price index will be used to measure the purchasing power in the economy and how it changes according to the country's currency, and it will determine the price level of the goods and services, and to measure the inflation that affects the purchasing power in an economy. According to the Department of Statistics Malaysia, the latest report of the consumer price index was in April. The inflation rate in April increased 2.3% compared to the same month of the preceding year. This rate also surpassed the average inflation rate for the period of 2011 to April 2022, which was 1.9% in this period. The consumer price index increased 2.2% from January to April 2022 compared to the previous year. So that's all from me. I will pass the presentation to the next presenter. Thank you. Good day, Doctor and my fellow friends. I'm Shanta Perman. My matching number is 20865. Here, I would like to present about the industry analysis. Usually, as you all know, industry analysis is a marketing process that provides statistics and data based on a company's products and services of a potential market. There are 4 types of industries that we've chosen, such as financial industry, which consists of Allianz Malaysia Berhad and Hong Leong Financial Group. The next one is consumer cyclical industry, which consists of Aeon Company Berhad, and the next one is consumer non-cyclical industry, which is Sam Darby Plantation Sendirian Berhad, and the last industry is technology industry, which is End-to-End Connect Berhad. First of all, the financial industry is a sector of the economy which consists of business and institutions that offer financial products and services to commercial and retail customers. The first financial institution that we chose is Allianz Malaysia Berhad. Allianz Malaysia Berhad, established in 2001 in Malaysia, and it is a diversified insurance firm that offers life and general insurance in Malaysia. In addition, Hong Leong Financial Group Berhad was established in 1963 and has made a steady progress and guided by the corporate strategy and supported by the strong management and the financial management as well. Besides, the consumer cyclical industry's revenue is strongly dependent on the overall economy. The company that we chose is Aeon Company Berhad, which consists of two segments, which are retail and property management services. Next, the consumer non-cyclical industry is less dependent on the economic cycle movements. The company that we chose is Sam Darby Plantation Sendirian Berhad, where the company manufactures or supplies products and services based on consumers' demand. Moreover, the technology industry produces and provides products and services such as electronic devices, and the company that we choose is End-to-End Connect Berhad, which operates in the technology industry and offers digital products as well. Next, I would like to briefly talk about this growth cycle of industries. The financial industry's growth cycle indicates a good prospects for the banking sector. Allianz Malaysia Berhad earned Ringgit Malaysia 1.62 billion in the first quarter of 2022, which increased from the previous year. And for the Hong Leong Financial Group Berhad remains positive to purchase a broad range of stocks in the first half of 2022. Next, let's look on the cyclical industry. So for the cyclical industry, it will strengthen the economic outlook and the employment growth data. For instance, Aeon's dividend payouts have been volatile and decreased during the last year. Next, let's move on to the non-cyclical industry, where it is consistently outperformed the stock market. Like for instance, Sam Darby Plantation Berhad net profit is increased 27.76% from the previous year. In addition, End-to-End Connect Berhad, which under the technology industry, underperformed and was less volatile than 75% of the company's stocks. Next, let us look on the non-cyclical industry to determine the competition of Sam Darby Plantation Berhad. Sam Darby Plantation Berhad's current stock price is Ringgit Malaysia 4.43, and its current average score is 8, which indicates that the stock performance is outperformed, which is as usual, we can see it as a good stock performance. On 28 May 2022, the Sam Darby Plantation Berhad's price closed at Ringgit Malaysia 4.43, which is higher than the 52-week low. Therefore, the current stock price of the Sam Darby Plantation Berhad implies a higher and better price of performance than the actual price in 2022. That's all from me. Thank you, and I will pass it to the next presenter to explain more detail about the fundamental analysis. That's all from me. Thank you.
Thank you, Shanta. A very good day, Dr. Adila. And my name is Himanandini Paniselvam. My mental number is 283095. I will be explaining about number 4 fundamental analysis, and there are 5 kind of ratios under this. First up is liquidity ratio, profitability ratio, leverage ratio, common stock ratio, and lastly activity ratio. Let me explain each one by one with their graphs. Alright, so under liquidity ratio, we have two types of ratio, which is current ratio and quick ratio. So let me explain the graph for current ratio first. The current ratio of End-to-End Connect Berhad shows an increase from 2019 to 2021, which is from 6.12% to 7.78%. This suggests that for the year 2021, the corporation will have 7.78 of its current ratio available to pay for each 1 ringgit of its current liability. The current ratio for Alliance Berhad climbed from 2019 to 2020, which is from 0.81% to 1.22%, but then it also decreased to 1.21% in 2021. Because the present ratio is greater than 1, the corporation may still certify its commitment even if the ratio varied from 2019 to 2021. Similar results occur with the Sam Darby Plantation, where the ratio remained constant at 1.04% in 2019 and 2020 respectively, but then increased to 1.23% in 2021. The current ratio for Aeon Berhad is below 1 ringgit each of the 3 years. This suggests that if a company's ratio value is below 1, it may be experiencing liquidity issues, yet if it can find alternative sources of funding, it may not be in a dire situation. A decent current ratio is typically anything greater than 1, with 1.5 to 3 being preferred. Therefore, in scenario, Alliance, Hong Leong, and Sam Darby maintain a favorable current ratio, suggesting that the business has more than enough cash on hand to cover its debt while making appropriate use of its resources. Additionally, End-to-End Connect's current ratio is too high, which shows that neither the company's current asset nor its short-term financing resources are being utilized effectively. So, looking at quick ratio, That figure above indicates that end-to-end Connect Berhad's quick ratio increased from 2019 to 2021 from 5.62% to 7.14%. In other words, it has more liquid assets than it has current liabilities. The quick ratio for Alliance Berhad as well fell from 2019, which is from 11.19% to 7.69% in 2020, but increased for the year 2021 to 8.77%. The same thing occurred to Hong Leong Financial Group Berhad, which has seen its share rise from 2019 to 2020 from 3.37% to 5.8% before falling once further in 2021 to 4.6%. As a result, compared to the previous years, this shows that the corporation has more liquid assets than current liabilities. Sam Dhabi Plantation's quick ratio has improved by 0.1% from 2019, which is 0.55% to 0.56% in 2020 and 2021. Comparatively, Aeon Company Berhad quick ratio grew from 2019 to 2021 by 0.06% to 0.18%. However, since the ratio is less than 1, the company can be at a stage of life when it faces a risk of losing its solvency. This would mean that the company's liquid assets no longer cover its current liabilities. Given the information provided above, we can conclude that Alliance Berhad has a greater quick ratio than other firms, which is a good thing. This suggests that the business may settle its present debts without liquidating its long-term assets. Alright, so moving on into profitability ratio, we have two, return on asset and return on equity. Let's look into return on asset first. The graph above illustrates that Sam Dhabi Plantation's return on assets increased from 0.88% to 12.11% from 2019 to 2021. A company's profitability in relation to its overall Sam Dhabi Plantation assets is shown by an increasing ratio. Additionally, this shows that compared to the previous year, the corporation will have higher assets than current liabilities in 2021. As for Alliance Berhad, the return on asset decreased from 3.51% to 2.64% from 2019 to 2021. The corporation may have over-invested in assets that haven't increased revenue, according to the declining return on asset. In contrast, Hong Leong Financial Group Berhad's return on asset varies relatively little from 1.47% in 2019 to 1.3% in 2020, before rising to 1.45% in 2021. This demonstrates that these businesses haven't been making the most use of their resources to boost sales. The similar thing occurred to Aeon Company Berhad, which saw its ratio remain steady from 2020 to 2021. We may also infer from the reasons given above that Sam Dhabi Plantations will have the highest ratio in 2021 with a 12.11% ratio. This shows that the company is doing a great job increasing profit with each investment. So, looking on into return on equity, in the chart above, Sam Dhabi's Plantation return on equity shows an increase from 1.58% to 20.17% from 2019 to 2021. The management of Sam Dhabi Plantation is able to properly manage shareholder capital as seen by the increasing ROE. Conversely, Alliance Berhad's return on equity fell from 2019 to 2021 from 18.84% to 15.09%. This demonstrates that Alliance Berhad's ability to create shareholder value and generate profits is declining. In addition, the ratio of Aeon Company Berhad fell from 2019 to 2020 from 0.12% to 0.06% and then rose in the year 2021 to 0.08%. This demonstrates that the company is not making enough money, yet Aeon Company Berhad reinvests the funds back into the business, increasing total assets, which raises shareholders' equity in 2021. The ratio for Hong Leong Financial Group Berhad declined from 2019 to 2020 before increasing in 2021, whereas end-to-end Connect Berhad saw the reverse trend, with a rise from 2019, which is 6.86%, to 2020, which is 9.76%, before seeing a sharp dip to 7.93% in 2021. We could tell that Sam Dhabi Plantation with a ratio of 20.17% in 2021 has the highest ratio overall. This shows that the business is doing well from the management perspective in making good earnings with the allocated amount of capital. Moving on to our leverage ratio, which consists of debt to asset ratio and also debt to equity ratio. So first of all, according to the following chart of debt to asset ratio, Sam Dhabi Plantation has the greatest debt to asset ratio, even though it significantly decreased from 2019 to 2021, which is 25.62% in 2019, 22.5% in 2020, and 18.66% in 2021 respectively. Comparatively to the other corporations, Sam Dhabi Plantation has a substantially greater level of leverage. As a result, if interest rates increase, Sam Dhabi Plantation would experience less financial flexibility and would be exposed to a high risk of default. When it comes to Hong Leong Financial Group Berhad, the debt to asset ratio rose from 2019, which is 10.47%, to 2021, 13.07%. Similar events occurred to Aeon Company Berhad, whose debt to asset ratio fell from 2019 to 2021 from 0.74% to 0.70%. If the ratio is less than 1, the corporation has more assets than liability and if necessary may pay its debts by selling assets. In addition, the percentage of end-to-end Connect Berhad climbed from 2019, which is 6.59%, to 2020, 15.96%, before declining in 2021 to 14.91%. From 2019 to 2021, Alliance Berhad's debt to asset ratio stayed the same, which is 0.08%. We may infer that Aeon Company Berhad has the lowest ratio when compared to other firms based on the justification provided above. This shows that the corporation is less dangerous the lower its debt to asset ratio. So, speaking about debt to equity ratio right now, Sam Dhabi Plantation compared to other corporations has the lowest debt to equity ratio from 2019 to 2021 as seen in the graph above. above. A decent debt to equity ratio is often less than 1.0. Additionally, end-to-end Connect Berhad's debt to equity ratio is below 1.0, coming in at 0.91% in 2019 and 0.14% in 2020, followed by in 0.2% in 2021. Some W Plantation and end-to-end Connect Berhad, on the other hand, demonstrate the capacity of shareholders' equity to pay off all outstanding debt in the case of a downturn in the economy. In addition, Hong Leong Financial Group Berhad's debt to equity ratio fell from 2019 to 2020 from 1.3% to 0.93% before fluctuating upwards in 2021 to 1%. The debt to equity ratio of Aeon Company Berhad declined from 2019 to 2021 from 2.86% to 2.36%. The company with the highest debt to equity ratio in 2021 is Alliance Berhad with a 4.5%. A high debt to equity ratio indicates that the firm has been active in using debt to finance its expansion, which is frequently correlated with high risk. According to the justification provided, a desirable debt to equity ratio is anything less than 1%, with a ratio of less than 1 being optimal because they have less assets to leverage. Some W Plantation and end-to-end Connect Berhad maintain the lowest ratio, which is less than 1.0 in comparison to the other businesses. Alright, if you see for common stock ratio, we have two, which is payout ratio and earning per share. So first off, according to the above chart of payout ratio, end-to-end Connect Berhad's payout ratio shows an increase from 2019, which is 36.58% to 2021, 109.62%. This shows that end-to-end Connect Berhad is paying out considerably more of its earning in dividends while investing less money back into the firm. The payout ratio for Alliance Berhad fell from 50.1% in 2019 to 42.3% in 2020, before rising to 50.02% in 2021. Despite the ratios in fluctuations between 2019 and 2021, Alliance Berhad still exhibits a positive indicator of a sound balance sheet. In addition, Hong Leong Financial Group Berhad's payout ratio has the worst performance, though only slightly increasing from 2019, which is 6.27%, to 2020 7.75%, and then declining in 2021 to 7.72%. The same is applicable for Aeon Company Berhad, where the ratio changed between 2019 and 2021. Some W Plantation's payout ratio increased from over year from 2019 to 2021 from 55.55% to 74.99% when it was already rather high. A range of 30% to 50% is regarded as a reasonable payout ratio as stated in the regulation. As a result of the reasoning given above, we can conclude that Alliance Berhad has maintained a solid payout ratio over the past 3 years because the ratio falls between 30 to 50%. This shows that the business is well established and in a sound period of a dividend distribution. So, speaking about earning per share, the figure above indicates that Hong Leong Financial Berhad's earning per share increased from 2019 to 2021. According to the bar chart, Hong Leong Financial Group Berhad will have the greatest earning per share in 2021, which is 199.8. This suggests that a high profit per share ratio has the potential to produce a sizable dividend for investors. In contrast, end-to-end Connect Berhad had the lowest earning per share in 2019 with 2.81. This implies that end-to-end Connect Berhad delivers lesser return to shareholders and gives bad indicates regarding the company's health. Earning per share for Alliance Berhad rose from 203.87 in the year 2019 to 227.53 in the next year, then fell to 197.98 in the following year. Despite the ratio fluctuating between 2019 and 2021, Alliance Berhad continued to operate well, and the ratio did not show a significant difference because the volatility only represented a tiny fraction of the total. The earning per share for Aeon Company Berhad had the same pattern, declining from 2019 to 2020 before increasing in 2021. However, some W Plantation profits per share rose from 2019, which was negative 0.2.9, to 2021, which is 32.6. A corporation with a high earning per share ratio may, in general, limit the reinvestment of capital to support further business expansion. In addition, a high ratio suggests a possible profitable investment depending on the stock's market price. When compared to other businesses, Hong Leong Financial Berhad exhibits the greatest earning per share ratio. So last but not the least, we have activity ratio and we have total asset turnover and inventory turnover ratio in activity ratio. So let me start with total asset turnover. As per the chart shown, Alliance Berhad's total asset turnover fell from 0.3 to 0.28 from 2019 to 2021. This ratio fell from 0.69 to 0.62 from 2019 to 2021 in Aeon Company Berhad as well, which experienced a similar phenomenon like Alliance Berhad. The corporation is not utilizing its asset as effectively as seen by the declining ratio of Alliance Berhad and Aeon Company Berhad. However, when compared to other firms, Alliance Berhad exhibits the lowest ratio. In the meantime, Hong Leong Financial Group Berhad asset turnover ratio fell from 1.43 in 2019 to 0.68 in 2020 before rising to 1.1 in 2021. End-to-end Connect Berhad's asset turnover ratio grew marginally between 0.37 to 0.39 from 2019 to 2021. This suggests that the business continues to preserve its asset and effectively uses them to boost sales. For the year 2019, which is 0.42, and to 2021, which is 0.64, Sun W's plantation asset turnover ratio progressively grew. Given that the ratio is within the range of 0.68 to 1.43, we can generally draw the conclusion that Hong Leong Financial Group Berhad has maintained a decent asset turnover ratio over the past 3 years. This suggests that the business is effective and turning its asset base into sales or revenue. And speaking about inventory turnover ratio, the inventory turnover ratio for Sun W Plantation declined from 1.8 in 2019 to 0.05 in 2020, and then marginally reduced once more in 0.04 in 2021. According to the chart, in 2019 and 2021, Aeon Company Berhad will maintain its current ratio, which is 6. The rationale leads us to conclusion that Aeon Company Berhad maintained a strong inventory turnover ratio in comparison to Sam Davi Plantation, as we don't have any other inventory since they focus more on services. This shows that there is a high demand for the company's product and that it is selling its items quickly. That is all from me. Thank you so much.
My name is Pauline and my metric number is 277423. Now I am going to explain on technical analysis of 5 hectic stocks. Firstly, Alliance Malaysia. The technical chart shows the movement of the stock price is taken for 7 weeks of trading time. The MACD line crosses from above to below the signal line, which consider the market is bearish. It gives the signal for buyers to buy the stock of Alliance Malaysia. We buy about 100 units of Alliance Malaysia at 12 cents each on 29 May. Then the price gained on 31st May at 12 each. We buy again 100 units at 12 each on 1st June, and the price increased to about 12 each on 6th June. During the period we traded, the relative strength index of Alliance tends to remain 40 to 70 range, which shows the signs of a bearish market. The next stock is Aeon. In the same period of trading, we buy 100 units of stocks at 1 ringgit 42 cents each on 1st June, and the next day we gain about 1 ringgit 44 cents each, even though the market is bearish. We buy again on 8th of June of 100 units of Aeon at 1 ringgit 54 cents each, in expecting the price will increase. On the 12th of June, the price gained about 1 ringgit 56 cents each, and we get a profit of around 64.10%. From the day, the Aeon market is bullish as the MACD line crosses from below to above the signal line. A rise in the moving average shows Aeon in an uptrend, while the decline in the moving average indicated the market is in a downfall trend. In addition, we have traded for Ong Leong Finance as well. By analyzing the chart, we buy 100 units at 19 ringgit 50 cents each on 21st May, and the price increased on 23rd of May to 19 ringgit 64 cents each. We buy Ong Leong stocks of 100 units at 19 ringgit 68 cents each, even though the market is in a downfall trend. The next day, the stock gained to 90 ringgit 78 cents each. MACD line crosses from below to above the signal line, which shows the Ong Leong market is in bullish on 19th May, while the 10th of the May, the MACD line crosses from above to below the signal line, which shows the bearish market. Hong Leong market shows the sign of bearish market when relative strength index tends to remain 40 to 70 range. Moreover, we buy stocks of End-to-End Connect Berhad. Although the End-to-End Connect market is bearish, we buy 150 units at 54 cents each, and the next day the stock increased slightly, which make us sell all the stocks at 55 cents each. We buy again End-to-End stocks on 16th of May, about 1000 units at 54 cents each. After 2 days, the stock gained to 56 cents each, which is gained around 178.57%. Overall, during the trading period, the end-to-end market is bearish. Typically, a price break above the moving average shows a buy signal, while a price break below the moving average shows a sell signal. Lastly, we trade Sam Davi Plantation stocks. We buy 500 units of Sam Davi stocks at 5 ringgit 6 cents each on 12th May, and the next day the price of the stock increased, and we sell all the units for 5 ringgit 12 cents each. On the same day, which is 13th May, we buy again 100 units at 5 ringgit 12 cents each. On 18th May, the stock gained to 5 ringgit 20 cents each, and we decide to sell all the stocks and gain profit about 19.23%. The MACD line crosses from above to below the signal line, which shows the Sam Davi market is bearish. On 22 June, the stock is oversold. When a stock is oversold, it trades at a price lower than its intrinsic value.
In conclusion, for the overall portfolio, we suffered about 30.09% losses in our equity portfolio trading from 9 May 2022 to 31st June 2022. Mostly all the 5 stocks that traded in last week were in the bearish pattern until the last day of trading. Total losses for all 5 stocks traded was RM249, with the beginning of capital invested was RM100,000. The highest losses stock was recorded from Sam Davi Plantation Berhad, which is negative RM2,270, following by End-to-End Connect Berhad, which is negative RM2,604. We conclude that all the bearish pattern in 5 stocks influenced by the several factors in the economy and industry environment. Obviously, one of the major elements influence the price of stock is economic outlook. The key factor affecting the stock's price, nevertheless, is the industry forecast. The stock price for other peer firms that are directly impacted by the success of rivals in the same industry. This factor that prevent chosen stock in the portfolio from meeting our prediction. The technical and basic analysis used in this study should only be regarded as resources for making decisions in investment. Unpredictable problems and the trajectory of the stock market go hand in hand with the risk. Thank you.